Hi everyone and welcome to today's Saturday session with ExamRevision. My name is Gearoid and we're going to look at Applied Arithmetic in the Junior Cycle Mathematics course. In particular, we're going to look at income tax, USC and PRSI. We are going to go into detail of some of the keywords and definitions that are used in income tax, USC and PRSI. And we are going to look at many examples based off common questions that are asked in the exam. We will also take a look at one past exam question. So let's get started. So firstly, looking at income, this is the amount of money you receive for the work or the job that you do. You may receive your income in two different ways. Firstly, if an employee is paid for the number of hours they work, they earn an hourly wage. So your number of hours times your hourly wage. That might be that you work 20 hours a week and you earn 10 euros an hour. So to get your income there, you would do 20 multiplied by 10 euros. Another way that you may receive your income is if you are paid the same regardless of the number of hours you work. Therefore, you earn a salary. So let's say one week you might work 20 hours, the next week you might work 30 hours, and then the week after you might work 20 hours again. It doesn't make any difference. You're still going to receive the same amount of money every week as you are earning a salary. Now, unfortunately, employees will not receive their full salary as most employees have to pay several deductions on the money that they earn. And this leads us to the difference between gross pay and net pay. Gross pay or gross income is the amount of money earned before any deductions take place. So again, if you had a job that paid you 10 euros an hour and you worked 20 hours in a week, that will give you a gross pay or gross income of 200 euros. Unfortunately, you might not pocket 200 euros as you may have to pay deductions. We will talk about what kind of deductions you pay later on. Net pay or net income or take-home pay is the amount of money you earn after all deductions take place. So this is the sum of money you do actually receive and is yours. Now, it's really important to know the difference between gross and net. Okay, if you think net, catching in a net, that is the amount of money that you actually have for yourself. Gross is what you start off with. So really important that you know the difference between gross and net here, and that you know all the different ways they can ask these. Gross pay or gross income mean the same. Net pay, net income or take-home pay as well. They can ask these any way they want, so make sure you're aware of all of these different keywords. Now, moving on to what kind of deductions we have statutory and non-statutory deductions. Now, you might not necessarily pay all of these deductions. Okay, it's different for each employee. So the statutory deductions are payments that must be made to the state. Okay, so the state, we're talking about the government. So statutory deductions we have is income tax, PRSI and USC. And again, I'll talk about those three later and where those taxes go once they go to the state. Then you have non-statutory deductions, and these are deductions that the employee decides to take away from their salary themselves. So it may be your health insurance, your trade union fees. There could be lots of different things that you want to have deducted from your salary, and you're just making your employer know, okay, I want this to be taken out of my payslip every week, every month, or so on. So these non-statutory deductions are more personal, whereas the statutory deductions, they are coming from the state, okay, and they're involuntary. You have to pay these if you fall into a certain pay bracket. Okay, so looking more closely at these statutory deductions, so we had income tax, PRSI and USC. So what are these deductions and where do they go? So your income tax is used for the payments of public services. So healthcare staff, teachers, the guards, any public service workers. So that's all going to pay for those salaries. PRSI or pay-related social insurance is used to pay old age pensions, children's allowance, job seekers allowance, etc. So looking after all of those things. And then finally, the USC or the Universal Social Charge is an additional income for the state. It's a relatively new tax that the state has introduced. And that's basically just another way for them to build up their income, okay, and to use it on several different projects. So looking more closely at income tax, there is two forms of income tax in Ireland. You have your standard rate and you have your higher rate. So depending on how much you earn, you may only pay the standard rate or you may have to pay both the standard and the higher rate, okay? So the higher rate would be for more of the top earners, okay? So they might have a cutoff point there, okay? If you reach this threshold, you're going to have to pay tax on anything over that at the higher rate of tax. So the percentage of tax for the standard rate and higher rate, they usually fluctuate from question to question. Normally the standard rate is 20% and the higher rate is 42%. It can be whatever, the question can change. So don't worry about that. Every question will be different, but normally it's 20% for the standard rate and 42% for the higher rate. And we'll take a closer look at that when we look at some examples. So just before we get started with some examples, just some keywords that are really important to know, and that is gross tax, tax credit, and tax payable. Okay, you really need to know the difference between all of these because they could ask for these individually within a question, or they could ask for multiple of these in a question. So your gross tax is the amount of tax owed to the state before tax credits are deducted. So basically, when you find out your standard rate of tax and your higher rate of tax, okay, how much does that total up to be? That is your gross tax. So this is before your tax credit kicks in. Your tax credit kind of alleviates the amount of gross tax you have to pay. So a tax credit is the amount of money deducted from the total amount of tax owed by the employee, or your gross tax. So firstly, when you calculate your standard rate of tax, or if you have to pay your higher rate of tax, you don't have to pay all of that tax because you may have a tax credit. So that tax credit brings down the amount of tax that you have to pay. So a lot of people get the word tax credit confused. They think it's a bad thing because the word tax is there, but tax credit is actually a good thing. It reduces the amount of tax that you have to pay. So really important that tax credit, you know that is a good thing for you. You take it away from your gross tax because you don't have to pay the total amount of tax. So when we take away the tax credit from the gross tax, that gives us our tax payable. So the tax payable is the final amount of tax that needs to be paid by the employee. So this is the real amount of tax you had to pay. You started off with your gross tax, then your tax credit kicks in. Now you do have to pay the tax payable. Okay, so really important to know off this formula for your tax payable, that your tax payable is your gross tax minus your tax credit. Okay, so once again, I'll repeat it that your gross tax is not the full amount of tax you have to pay. Your tax credit kicks in, helps you out a little bit, and then your tax payable is the real amount of money that you have to pay to the state. Now, depending on what your tax credit is, the bigger it is, the more it's going to help you out. But that will change in every single question. Again, your tax credits can range between €1,000 to €2,500. It all depends again on the question, just like I said with the percentages of standard rate and higher rate tax. So now that we know all of our keywords, we understand what the different types of taxes are, we know what a standard rate and higher rate of tax is in our income tax, we should be able to attempt some example questions. Okay, so the first question we're going to look at an income tax question says that Jack's gross income is €30,000. He pays tax at a rate of 20%. His tax credit is €1,200. Calculate his gross tax, his tax payable, and his net income. So in this question here, they've asked us to find three things: Jack's gross tax, his tax payable, and his net income. So just remind yourself, what do those three things mean? His gross tax is the amount of tax that he pays before his tax credit kicks in. His tax payable is the amount of tax he will have to pay. So that's the tax after his tax credit is kicked in. And finally, his net income is the amount of money that he takes home after all of the deductions have been paid. So before we get started with the question, we'll just highlight what they've told us that's important. They've told us that his gross income is €30,000. So that's how much he gets paid at the start before any deductions are kicked in. He pays tax at a rate of 20% and he has a tax credit of €1,200. So to begin this question, I need to find out what tax he pays. To do that, I'm going to find out what is 20% of €30,000. To find this out, I need to change 20% into a fraction or a decimal. So 20% as a fraction would be 20 over 100, or as a decimal, it would be 0.2, multiplied by €30,000. Popping that into my calculator, that gives me €6,000. This is Jack's gross tax, as it is the amount of tax he has to pay before his tax credit kicks in. So our first answer from this question is gross tax is equals to €6,000. So Jack does not have to pay €6,000 in tax because he has a tax credit of €1,200. That tax credit will come off the gross tax, giving us our tax payable, or the amount of tax that Jack does really have to pay. So again, our formula for tax payable is my gross tax minus my tax credit. My gross tax was €6,000 and my tax credit was 1,200. That gives me a tax payable of €4,800. And that is my second answer for this question. That is the amount of tax that Jack does have to pay on his salary. Finally, to find Jack's net income, we know that Jack started off with a gross income of €30,000. Then the amount of tax he has to pay is 4,800. So to find his net income, we are going to take his gross income, which is €30,000, and take away from it his tax payable, which is 4,800. That's the only deduction that he has coming from his salary. That gives me an answer of 25,200. And that is Jack's net income. That completes this first example. Our second example tells us that Laura earns €35,000 a year. She pays tax at a rate of 20%. She has instructed her company to pay her annual trade union fees of €400 directly from her salary. She has a tax credit of €1,800. Find Laura's tax payable, total deductions and net pay. Again, this question is very similar to our first example. It's asking us to find three things: Laura's tax payable, her total deductions and her net pay. Again, if we remind ourselves what each of those three things mean, tax payable is the amount of tax she has to pay after her tax credits have kicked in. The total deductions is everything that's being deducted from her salary. So here we have her tax that she's paying and her annual trade union fees. And her net pay is the same as her net income or take-home pay. That's how much money she's able to walk away with. So before I get started, let's just highlight some key important information. Laura's earning €35,000 a year. She's paying tax at 20%. She's instructed her company to take away her annual trade union fees of €400. That's going to come off her salary. And finally, she has a tax credit of €1,800. So the same as I started example 1, I'm going to find out how much tax or income tax Laura pays in a year. So we know she pays the rate of 20%, so I'm going to find out what is 20% of €35,000. To do that, I'm going to change 20% into a decimal, so 0.2, and multiply that by 35,000. Popping that into my calculator, I get an answer of €7,000. This €7,000 represents Laura's gross tax. That is the amount of tax she has to pay before her tax credit kicks in. For us to find her tax payable, we must take her gross tax and subtract her tax credit. So again, her gross tax was €7,000 minus her tax credit of €1,800, and that gives me an answer of €5,200. And there is my first answer for this question. Laura's tax payable is €5,200. Again, moving on to the next part of this question, they ask us to find her total deductions. So how much money is being deducted from Laura's salary? Well, we know that she has to have a tax payable of €5,200, and she's also deducting her annual trade union fees, which is €400. So to find her total deduction, I'm going to add those two numbers together, and that gives me an answer of €5,600. And this gives me my second answer to the question. Laura's the total deductions is €5,600. The third and last part of this question asked me to find Laura's net pay. So her net pay is going to be her gross income, how much money she started off with, and subtract her total deductions from that. So her gross income was €35,000. And we just found out previously that we are deducting €5,600, which is her tax she has to pay and her trade union fees. Subtracting these two numbers together will give me a net pay of €29,400. And this gives me my final answer and completes this question for me. Okay, so our third example here says that Jack earns €40,000 a year. The standard rate of tax is 20% and the higher rate is 42%. The standard rate cut-off point is 45,000. His tax credit is €1,800. His union fees are €300 and his health insurance is €550. He has no other deductions. What is his take-home pay? Okay, we can see here they've given us a lot of information. There's a lot happening with Jack's money, but this time they've only asked us one question. They only want us to find out what is his take-home pay. So that's the only thing we need to highlight really in this question. So the important information they've given us is that he earns €40,000 a year. The standard rate of tax is 20%. They tell us the higher rate is 42%. And then they use this new word we haven't seen yet, standard rate cut-off point is €45,000. So if we just talk about that, that standard rate cut-off point means that you're going to pay the standard rate of tax up until €45,000, and then anything you earn after €45,000, that's going to be taxed at the higher rate. But if we look at Jack earns only €40,000, so he doesn't reach that threshold of €45,000. So that means we don't actually have to worry about the higher rate of tax at all here, because Jack does not earn enough money to pay any higher rate of tax. So all of his money is going to be taxed at the standard rate. Nextly then, they tell us that his tax credit is equals to €1,800. He has union fees of €300 and he has health insurance of €550. So he's got two additional deductions coming out, his union fees and his health insurance. So we need to deduct those away from his salary as well. So let's get started into this question. Again, I'm going to find out how much income tax he pays. So we talked about this earlier, he's only paying the standard rate of tax because he doesn't earn enough money. So we're going to find out what is 20% of €40,000. Again, figuring out what is 20% of the fraction or decimal, 0.2 times €40,000. That then gives me €8,000. That is Jack's gross tax. He doesn't have to pay all of that tax because he has a tax credit of €1,800. So we can now find his tax payable by doing his gross tax, which is €8,000, minus his tax credit, which is €1,800. And that gives me an answer of €6,200. That is his tax payable. So the real amount of tax he has to pay on his salary. So we now know how much tax he has to pay. We also know that he has to pay his union fees and his health insurance. So the total deductions that he's going to have coming from his salary is going to be €6,200 plus his union fees of €300 plus his health insurance of €550. That gives me a total deduction of €7,050. So that number there indicates how much money is going to come off Jack's salary of €40,000. So we have his tax in there, €6,200, his union fees and his health insurance giving us a total deduction of that. So now I can go and find out what is Jack's take-home pay. And that is going to be his gross income or his salary, which is €40,000, minus all of the deductions that he has. And that gives me a final answer of €32,950. So Jack's take-home pay, or his net income, or his net pay, is equals to 32,950. So again, just looking back over that question, here they had included the standard and the higher rate of tax. That new word there, just to be aware of it, okay, standard rate cutoff point, that means the amount of money that you pay the standard rate of tax until, and then you move on to the higher rate of tax for anything you earn after that. We'll take a look at a question where we have to use the higher rate in the next example. So in this question, we didn't have to worry about the higher rate of tax because Jack wasn't earning a salary high enough to pay the higher rate of tax. We had his tax credit that kicked in for his gross tax, which gave us his tax payable. Then we found out how many deductions he had. He had his tax payable, his union fees, and his health insurance, and we subtracted all of those away from his gross income to give us his take-home pay of 32,950. Okay, so our fourth example tells us that the standard rate of tax is 20% and the higher rate is 40%. The standard rate cut-off point is 33,000. Mark has a gross income of 55,000 and tax credits of 2,200. Calculate Mark's net income. So we can see here, unlike example 3, Mark is earning more than the standard rate cut-off point. So that means he's going to be paying both the standard rate and the higher rate of tax on his income. So if we start off by just highlighting some important words here, the standard rate of tax is 20%, the higher rate is 40%, the standard rate cut-off is 33,000. So that means you're going to pay 20% tax on everything you earn up until €33,000, and then after that you're going to have to pay the higher rate. They tell us that Mark has a gross income of €55,000 and tax credits of 2,200. And they want us to calculate his net income. So here he's no additional deductions like health insurance or trade union fees. He just has his standard rate and higher rate of tax, and then his tax credits being applied to those. Okay, so starting off this question again, I would say that he has to pay 20% the standard rate of tax on all of his income up as far as 33,000. So you know that you're paying a standard rate or 20% of tax on 33,000. Then you have to pay the higher rate of tax, 40%, on everything else that you earn after 33,000. Now, some people make the mistake and they tax the 20,000 at 33% and then they tax the 40% again. So they double tax the same amount of money. That's not what happens here. You're only taxing 20% the first 33,000, and then everything after that you have to tax at the higher rate, which is 40% here. So we've already taxed his first 33,000. We now need to tax 40% to all the additional income after 33,000. So we're going to charge 40% to whatever his total gross income was, which was 55,000 minus 33,000 euros. That's the amount of money that's going to be taxed at the higher rate. So that's going to be 22,000. So he's going to be charged 33,000 at 20% of tax and 22,000 at 40% of tax. So that means all of his gross income of 55,000 will be taxed, some at the standard rate and some at the higher rate. Okay, so let's calculate those taxes now. So 20% of 33,000, again I'll change it to a decimal, 0.2 multiplied by 33,000 gives me an answer of 6,600 euros. And then taxing the 22,000 at 40%, again changing 40% to a decimal will be 0.4 multiplied by 22,000. And that gives me a value of 8,800. So you can see that even though we're taxing less money at the higher rate, we're getting more money in tax because obviously you're finding tax at a higher percentage. So now if I add these two numbers together, that is going to give me my gross tax, which gives me a gross tax of 15,400 euros. So that is Mark's gross tax, 15,400, but we know he doesn't have to pay that amount of tax because he has a tax credit, which is 2,200. So I'm going to take that away. This now gives me my tax payable, which is 13,200. So Mark has to pay in tax 13,200. So now I can go and find his net income, because he doesn't have any other deductions, only the tax that he has to pay. So his gross income was 55,000 minus his tax payable, which was 13,200, which gives Mark a net income of 41,800. So that is his take-home pay. That is the final answer to this question, that Mark's net income is 41,800. So here is an example of a question where you had the two different rates of taxes, your standard and your higher rate. Really important that you're able to do this, okay? That you're just taxing up until the standard rate cut off at the standard rate, and then anything else you're taxing at the higher rate. Make sure you're not taxing the same amount of money twice, and don't forget about your tax credits as well. So when you add up both of your tax rates, that you get your gross tax and then you minus your tax credit to give you your tax payable there. Okay, again, that tax credit is a good thing. It comes off our gross tax, so it helps us. We don't have to pay as much tax when that kicks in. So moving away from income tax and looking at our next statutory tax, the universal social charge. So on the screen here, we can just see the rates for the universal social charge in Ireland currently. So again, depending on how much you earn, you will not pay all of the percentages that you see up here on the screen. So we can see that on your first €12,012, you'll pay 0.5% of USC tax on that. Then the next band moving up from that, between €12,012 and €22,920, you will pay 2% USC tax on that. Third band then, from 22,920 to 70,044 euros, you will pay 4.5% USC tax on that. And then anything you earn after 70,044 euros, you will pay 8% USC tax. So depending on how much you earn, you might not go past the second band there, or you might finish at the third band. Very few people would go above the 70,044 euro band and pay 8% on that, okay? A lot of people would stop there in that third band. So again, just like what we had with our standard rate and our higher rate, you're not going to tax the same money twice. So your first €12,012 just gets taxed at 0.5%, and you don't tax that money again. It moves on to the next part of your money, depending on how far your annual salary goes up until. So once we take a look at the next example, it'll become a bit clearer, but it's pretty much the same as what you did there for the standard rate and higher rate tax. Just depends, you might have to do it more times depending on how far your salary goes. So looking at this example, it says that Sarah earns 50,000 per annum. Calculate the amount that will be deducted from her annual pay for the universal social charge. So over on the right hand side there, I have our rates there for the different bands. So we see that Sarah earns 50,000 euros a year. So that means that she is going to stop after band 3. So she's not going to meet band 4. So she will do band 1, band 2, and then she will do band 3. So I would complete this question doing it in 3 steps. The first step, I would find out how much tax she has to pay in the first band. So that would be 0.5% of 12,012 euros. Find out how much that is. The second step I would do, we need to find out how much she pays in the second band. So that would be 2% of the amount in between that band. So that's the difference between 22,920 and 12,012. She's being taxed on 2% in that money there. And then finally, I would figure out the third step then. I would figure out she's paying 4.5% of USC tax on the money in between that third band, but she doesn't earn up as far as 70,044. She only earns up as far as 50,000. So she's only going to pay 4.5% on the amount of money that goes from 22,900 to 50,000. So it's the money in between that. So 50,000 subtract the start of that band there, 22,920. And for Sarah, we can ignore the fourth band because she doesn't earn enough money. So working out there, 0.5% of 12,012 euros. I'm going to change 0.5% into a fraction or a decimal. Now be careful, it's already a decimal as a percentage, but I need to change it into a decimal. So I'm going to divide by 100, which will be 0.005 multiplied by 12,012. And that gives me €60.16. So that's the amount of USC she has to pay from my first band. So that's the first band complete. Next, then moving on to the second step, my second band, she has to pay 2% of the money in between this band. So first I need to figure out, well, how much money is in this band. So I need to do 22,920 minus 12,012. And that gives me €10,000.908. So I need to find out what is 2%. So 2% as a decimal will be 0.02 multiplied by 10,908. And that works out to be €218.16. So that's the amount of USC she's paying from the second step. That's that done. And then my final step, then I need to find out she's paying 4.5% of the money in between 22,920 and up to the amount that she actually earns in the year, which is 50,000. So I need to first figure out how much money is in that band. So 50,000 minus 22,920, and that gives me €27,080. So I'm now going to find what's 4.5% of that. So again, 4.5% as a decimal is 0.045 multiplied by the gap in between those two money, which is €27,080, and that gives me €1,218.60. So now to find out the total amount of USC that Sarah has to pay, I need to take my three charges from the three brackets. So that would be €60.16, €218.16 and €1,218.60, and add those three together, and that will be the total amount of USC that she has to pay on her annual earnings. So it's going to be €60.16 plus €218.16 plus €1,218.60. And that gives me a grand total of €1,496.92. And that is my final answer. That's the amount of USC that Sarah has to pay on her 50,000 per annum salary. So again, this USC question is kind of done in different stages depending on how many rates you have to go through. So I had to go through three here. So firstly, just like my standard and my higher rate earlier with my income tax, I'm paying different percentages of tax on different rates of money. Okay, so Sarah here earned 50,000, so she moved on to the third band here. So I was doing that three times. Okay, as I said, most people would fall into that third band. If they were asking a question, that'd be more than likely as far as you would go. So just exactly like that. Again, very much repetitive of what we were doing there with the income tax question. Okay, so moving on to our last statutory deduction, PRSI. We talked about this earlier, that it was used to pay for job seekers allowance, old age pension and other things. So the percentage of the wage that you pay on PRSI depends on how much you earn and then what class under which you are insured. So most people fall under class A PRSI, which is usually 4%. So again, this comes off all of your earnings. So unlike income tax, where you had the higher rate and the lower rate tax, and in the USC you had your different bands and you paid different percentages of tax for that. Whatever percentage you pay that in your entire earnings for your PRSI. So let's look at one last example here. This mixes up income tax and PRSI together. So it says Sam has a gross annual income of €60,000. His standard rate cut-off point is 32,000 and the standard rate of tax is 20%, with the higher rate being 40%. So Sam has a tax credit of €2,500. He is in class A for PRSI and will therefore pay 4% on all his earnings. Calculate Sam's net income. So again, this question here is asking us to find his net income or his take-home pay. And the important piece of information they give us, they tell us his income is €60,000. The standard rate cut-off is 32,000. So he's going to pay the lower rate of tax, which is 20% on the first 32,000. And then he's going to pay the higher rate tax of 40% on everything else he earns after 32,000 going up to 60,000. They also tell us that he has a tax credit of €2,500. And that he's in class A of PRSI, which means he has to pay 4% on all of his earnings. So when completing this question, I would work out the income tax first, find out what his gross tax is, take away his tax credits, and then get his tax payable. And that would be his first deduction coming from income tax. And then I would worry about the PRSI then after that and find out how much PRSI he has to pay. And then that would be a second deduction then from his gross income. That then, once you take those two deductions away, because they're the only deductions we have from this question, that will give you Sam's net income. So working with the income tax first, we know that he has a standard rate of 20% tax that he has to pay, and that goes up until the standard rate cut off, which is 32,000. So to figure out what 20% of 32,000 is, we're going to change 20% into a decimal and multiply it by 32,000. That gives me an answer of 6,400 euros. The next piece of tax that he has to pay is the higher rate, which is 40%. And he has to pay that on everything he earns after 32,000. So he earns up to 60,000. So it's the difference between 60,000 and 32,000. And the difference between those is 28,000. So we need to find out what 40% of 28,000 is. So to calculate that, 40% as a decimal is 0.4 multiplied by 28,000, which gives me an answer of 11,200 euros. So Sam's gross tax from his income tax is 6,400 plus 11,200. Which gives me a total of 17,600. Moving on then, I'm just going to take away his tax credit. So that will give me his tax payable for his income tax. I'll just move it up here. So his tax payable is going to be his gross tax, which is 17,600, minus his tax credit, which is 2,500. And that gives me a tax payable of 15,100. So that's his first deduction there. That's the income tax that he has to pay on his gross income. So we'll just highlight that as important. We need to come back to that later on. So next, if we look at his PRSI, this is a brand new tax, so we're starting again. So he's paying 4% because he's in class A on all of his income. So you're finding 4% of his entire income, which was 60,000 euros. That's the amount of PRSI he's going to pay for the year. So again, we're going to change 4% into a decimal, which is 0.04, and multiply that by 60,000 euros. And that gives me an answer of 2,400 euros. So that's the amount of PRSI he's going to have to pay. Again, I'm going to highlight that. So with PRSI, you just find the percentage of the entire amount, and that's exactly what he has to pay. He doesn't have any tax credits or anything like he does with income tax for this. You just have to pay the full amount. So now we're ready to finish off the question and find out what Sam's net income is. So his net income is going to be how much he started off with his gross pay, which was 60,000 euros. And then we're going to take away his total deductions. So firstly, his income tax was 15,100. And then we're also going to have to subtract his PRSI, which is 2,400. And once I subtract those two values, then that will give me his total net income. So 60,000 minus 15,100 minus 2,400 gives me a net income of 42,500 exactly. So we can see here that Sam started off with 60,000 after his income tax kicked in, after his PRSI kicked in, he was left with a take-home pay of 42,500. So again, two separate taxes, income tax and PRSI, they don't mix with each other. You do them separately, but you take them both away from the gross income. If we had a USC tax inside in that question as well, again, we would treat it separately and just take that away with the deductions there, like the PRSI and the income tax at the very end. And also you could have your health insurance, your non-statutory deductions as well. All of those could play in. Again, they're not going to give you all of those in one question. There'd be too much work involved and you're kind of doing the same thing for everything. So Normally it might just be income tax and a non-statutory, or you might have PRSI by itself, or you might have USC by itself. So they can fluctuate the way they ask the questions, but we've kind of covered them all from the 6 examples that we've looked at today. So before we finish up, we'll look at one exam paper question. So this was from the paper in 2022 and it was on question 1. So it tells us that Jane has a gross annual income of €56,000. Jane pays income tax on her gross income at a rate of 20% on the first 44,300 and 40% on the balance. Work out Jane's annual income tax at each of these two rates, 20% and 40%. So in this question, we don't have to apply any tax rates because they haven't given us any in the question. They only want us to find out how much tax she has to pay at the 20% and how much she has to pay for 40% tax. So if we start by highlighting some important information, Jane's gross annual income is $56,000. The smaller rate of tax is 20% and she pays that on the first 44,300 and 40% then on the rest of it. Okay, so beginning this question, we firstly know that Jane pays 20% of tax on the first 44,300. Okay, so just like we've done previously in the example, we're going to change 20% to a decimal, 0.2, and multiply it by that amount that we want to find the tax of. So 0.2 multiplied by 44,300 gives me a total of 8,860. And that is my first answer to this question. So the amount of tax that she has to pay at the 20% rate is 8,860. The second part of this question wants me to find out how much tax she pays at the higher rate. So we need to find 40% of the remainder of the money that she has left over after 44,300. So we're finding 40% of the difference between her total income, which was 56,000, minus 44,300. So that difference works out to be 11,700. Therefore, we need to find out what is 40% of 11,700. So changing 40% to a decimal, 0.4 multiplied by 11,700. And that will give us the amount of tax she's paying at the higher rate, 40%. So 0.4 multiplied by 11,700 gives me an answer of 4,680. And that is my answer to the second part in part 1. The income tax paid at 40% is 4,680. Part 2 of this question says that Jane has an annual tax credit of 3,300. Work out Jane's annual take-home pay. So in part B here, or part 2, they have given us what the tax credit is. They've told us she has a tax credit of 3,300, which we know to be a good thing. And they want us to use this to find out how much money Jane will take home with her, what's her net income. So before I can find out what Jane's annual take-home pay is, I need to find out what Jane's tax payable is. So how much tax does she really have to pay? I know from the previous part that she pays income tax at 20%, and that is 8,860, and income tax at 40%, which is 4,680. So from both of those answers, I can find out what her gross tax is. The amount of tax she has to pay before her tax credits kicked in. That will be 8,860 plus 4,680. So our gross tax works out to be 13,540. Now I can find Jane's tax payable by taking her tax credits away from 13,540. So our tax payable will be 13,540 minus her tax credits of 3,300. That gives me a tax payable of 10,240. So in reality, Jane has to pay tax of 10,240. To find Jane's take-home pay, we're going to take her gross income, which is 56,000, and take away her tax payable, which is 10,240. That gives Jane a take-home pay of 45,760. And that is my final answer for part 2 here. So you can see from that exam question, it's very similar to the previous examples we've done. I think some of the examples were more difficult than that. But hopefully you found that question okay and you were able to make a good attempt at it yourself. So that concludes today's Saturday session with Exam Revision. We looked at applied arithmetic, and in detail we looked at income tax, USC and PRSI. Just looking through all the examples there, you can see the questions can be very similar, but really important that you know the keywords there. We talked about gross income, net income, gross tax, net tax, standard rate cutoff point, standard rate of tax, higher rate of tax. So there's a lot of different words. You kind of need to know the terminology with these. So make sure you learn those off and you know what each one of those stands for. Don't worry about knowing the definitions of USC and PRSI and what they're used for in real world context, but just make sure you know how to apply them. It's always nice to know the backstory behind them as well, what they're actually used for by the state when they're taken away. So I hope you enjoyed today's lesson, and I'll see you again soon. Take care.